Welcome back to Investing Talk Podcast.
Today we're looking at LM Funding America.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
The story here is, well, it's fundamentally one of a really dramatic transformation.
It is.
LM Funding America isn't just one business anymore. It's this fascinating two-pronged approach.
Right. They started out rooted in this, unique alternative finance space.
A very specialized corporate footprint.
Exactly. But over the last year, they have just thrown everything behind an aggressive push into digital asset mining.
So that legacy business, the finance side, it's still there providing some cash flow, but it's really taken a back seat.
It's totally secondary now. The real focus is on maximizing their balance sheet exposure to crypto, to Bitcoin specifically.
And what's interesting is they're not just selling what they mine to cover costs.
Not at all. They're pursuing a very strict Bitcoin HODL strategy.
HODL, right. The old hold on for dear life.
That's the one. They retain the Bitcoin they mine, it's a huge decision.
It is, because it totally separates them from a lot of their peers, the ones who are just constantly churning through assets, selling them off.
It makes their success dependent on two things, really. One, mining efficiently, and two, maybe more importantly, the price of Bitcoin itself appreciating.
And the market seems to be validating this whole pivot.
Dramatically.
Yeah.
We saw the proof when the Q3 2025 results came out in November.
Revenue spiked 74% year over year.
That kind of growth, that's what tells you a pivot is actually working.
And it's not just the top line growth. The operational numbers are maybe even more telling.
Right. They improved their mining margins to a really robust 49%.
49%. And that was a steady climb all year, wasn't it?
It was. If you look at the progression, it went from about 38% in Q1 to 41% in Q2, and then boom, it hit that near 50% mark.
So it proves they're not just, buying a bunch of machines, they're actually running them well.
Running them efficiently. And that momentum it's critical because they've been in major acquisition mode.
This whole success story is built on scale.
It is. They picked up an 11-megawatt mining site in Columbus, Mississippi. Cost them about $4 million.
And that deal closed back in September.
Yep. And that one acquisition boosted their total power capacity up to 26 megawatts.
26 megawatts. That puts them pretty firmly in the mid-tier of players. It shows they're serious.
For sure. But they're not done. They're still in that build-out phase.
The Oklahoma site is next, right? The 15-megawatt one.
That's the next big target. The plan is to have that fully online by January 2025.
Which would set them up for a huge production ramp-up right at the start of the new year.
If they can hit that timeline. And that ability to acquire and build. And it brings us to the real heart of the investment case here.
The financial strain. And I'd say the financial engineering, too.
Absolutely.
Yeah.
You can't execute this kind of rapid expansion without, deep pockets and some really shrewd capital management.
We saw that over the summer.
We did. They pulled off a pretty substantial capital raise in August and September.
$21.3 million.
Right. Through various placements. And the money was explicitly for growing that Bitcoin treasury and expanding their footprint.
So they raised the cash and put it to work immediately.
Immediately. Deployed it right into assets and infrastructure.
Right.
And the result is, it's arguably the biggest bullish driver for the stock.
The balance sheet.
The balance sheet. As of September 30th, their Bitcoin treasury was valued at $34.7 million.
Okay, but for investors listening, you have to break that down. You have to put that into per-share terms.
This is the critical piece of the puzzle for you. That $34.7 million, it represents $2.24 per share.
And that's the whole nugget right there. The underlying Bitcoin assets per share are way more than the stock's recent price, which has been just over $1.
Exactly. It fundamentally means that if you believe they can execute, you're getting a chance to buy $2.24 worth of Bitcoin for, maybe $1.20, depending on the day?
That perceived discount is the main attraction.
It is, especially when you pair it with the fact that they have pretty low long-term debt, which gives them some resilience.
Okay, but let's look a little more critically at what management's been doing with the share structure.
Right. They've been very aggressive in fighting dilution, but it's complex.
So after the quarter ended, they launched a share buyback program.
Immediately. They repurchased over 3.3 million shares and another 7.3 million warrants.
But they used $8 million from a loan facility to do it.
Yes, and they authorized another 1.5 million buyback on top of that.
That's aggressive. But using debt to buy back shares, that adds a layer of leveraged risk to what's already a pretty speculative stock. So why the urgency?
Well, and this is the unspoken layer here. This ties directly into the market chatter about Nasdaq Q compliance.
Because the stock has been trading right around that minimum bid price. It has to stay above $1.
Exactly.
Yeah.
So these buybacks, they're not just about boosting metrics. They're a critical defensive move. They're trying to support the price and keep any delisting concerns at bay.
So management is using capital to reduce the float and prop up the price. It's a high-stakes play.
A very high-stakes play. It makes the whole financial maneuvering look less like a simple act of confidence and more like, well, part of a survival strategy.
But at the same time, operationally, they were still doing well.
Yes, remember that core EBITDA was 2.6 million in Q2. So they're showing operational success while fighting this technical battle on the side.
Okay, so they've set the stage both strategically and financially. What are the immediate triggers we should be watching for over the next, say, 3 months, December through February?
The next few months are all about execution. That's it. Proving that all the capital they raised and the new capitals they bought are actually turning into more Bitcoin in the treasury.
There's a calendar of events.
There is. First up is December 9th, the potential ETF rebalancing.
Okay, and why does that matter?
Well, with all the money pouring into crypto ETFs, any rebalancing could shift institutional trading, and that could move the price of Bitcoin itself.
Which directly impacts the value of their entire treasury.
Exactly. Then, in January, we get the first real look at their progress.
The preliminary production report on January 15th.
Right. That's the first hard number that'll tell us if the new capacity is hitting its stride and if Oklahoma's on schedule.
But the main event is the full picture.
Always. The Q4 earnings announcement. That's scheduled for February 14th.
Valentine's Day.
Yep. That earnings call is the moment of truth. It'll show us the speed and the profitability of their new, bigger 26-megawatt operation.
And if they miss that timeline or show bad efficiency?
It would seriously challenge the whole bullish case.
Now, what about the technicals? How's the chart looking?
Well, the stock has shown some resilience. It's bounced off its 52-week lows of 89 cents.
And it's holding that critical $1 mark for now.
It is. It's in what looks like a bullish consolidation. The key support level is around 95 cents.
So if it breaks below that,
then those Nasdaq Q compliance worries come right back to the forefront. On the upside, the big resistance level is 160.
a sustained move above 160 would be a major signal.
A huge signal, especially if it happened alongside good production news. It would show the market is finally starting to value the stock based on its assets, not just its compliance risk.
And the analysts are certainly bullish.
I mean, they're throwing out some eye-watering targets. The consensus right now is a strong buy with a 12-month price target of $5.
$5, that's what, over 340% upside from where it is now?
It's an incredibly aggressive target, and it means the stock is really only suitable for a certain type of investor.
Someone with a high tolerance for risk.
A very high tolerance. You can see it in the beta, which is elevated at 1.85.
So just to explain beta, that measures volatility. A beta of 1.85 means if the S&P 500 moves up 10%, this stock is expected to move up 18.5%, and the same on the way down.
Right, so it's not just a Bitcoin proxy. It's a leveraged Bitcoin proxy. If Bitcoin pulls back 10%, you could easily see this stock fall, 18, 20%.
Yeah.
It amplifies everything.
Speaking of leverage, what are the speculative catalysts, the rumors?
Well, there's persistent market chatter that the company might expand its Bitcoin holdings even more.
Just keep accumulating.
Right, using their flexibility to react to market conditions. The other big rumor is about M&A.
Mergers and acquisitions.
Yep. The idea is that since they've built up this $34 million war chest, they might go shopping for distressed mining assets.
Which makes a lot of sense in a cyclical industry like mining.
It does. If they can use their capital to snap up cheap hash rate from competitors who are struggling, they could scale up even faster than building from scratch.
Okay, but we have to balance the optimism. What are the biggest risks?
The first one is obvious. A crypto drawdown. This entire thesis is a leveraged bet on Bitcoin.
Right. If Bitcoin has a major correction, that $34.7 million treasury takes a direct hit.
A huge hit. A 50% drop in Bitcoin's price means $17 million just vanishes from their balance sheet. That crushes liquidity and confidence, no matter how well the machines are running.
And the second risk goes back to those dates we mentioned.
Execution risk.
Okay.
Exactly. Management promised a massive expansion. Delays in getting Mississippi and Oklahoma running at full speed, that would slow everything down.
And any operational delay, especially if Bitcoin's price is also falling.
It feeds right back into those Nasdaq Q compliance concerns. It becomes a vicious cycle. The focus shifts from growth to just survival.
So to wrap it all up, when you boil it all down, what's the thesis?
It's a compelling but very high-stakes growth story. It's driven by growing mining volume and rising margins.
But the key differentiator is that asset base.
Absolutely. It's maintaining one of the largest per-share BTC treasuries among its microcap peers. You combine that asset strength with a management team that's being very active, maybe even aggressive, to fight dilution, and you get a highly speculative play.
So while the analysts see that 340% upside, the near-term performance is just exceptionally reliant on Q4 execution.
They have to prove they can turn that capital strength, that big BTC treasury, into sustained, and this is the key word, profitable operational growth.
The fundamental question for you, the investor, is really whether you trust this management team to execute a multi-million-dollar ramp-up in just a few months, especially since they use debt to manage their compliance risk. That trade-off is what defines this stock right now.